When I was brand new to investing, I literally had no idea how to get started. Even today, when I talk to my friends and family that are new to investing, I ask if they have money in the market, and they say they literally have no idea what to do. In this video, we're going to take you through the step-by-step process to make your first investment. My name is Brian Feroldi.
And my name is Brian Stoffel.
Thanks to Quarter for sponsoring today's video. Brian, if somebody comes to you and they say they want to start investing, what do you tell them?
I tell them, before we get started, we need to hold on 1 second because there are 3 things that have to be in place first. The first is that you need to make sure that you have paid off all of your high interest debt. Debt that compounds at faster than 10% per year is going to keep building and building and building. You want to take care of that before you put any money in the stock market.
The second thing we want to make sure that people have before they start investing is an emergency fund. Life is unpredictable, and you can be sure that something will happen in the future that requires you to access hundreds or even thousands of dollars. If you don't have a pool of cash to cover that emergency, you're going to have to sell your investments, and the chances are that's going to come at an inopportune time. So make sure you have a fully built out emergency fund before you invest.
And third, you need to make sure you've got the right time horizon in mind. Brian and I are big believers that investing in the stock market is a great way to build wealth because it always goes up, but it always goes up over a long enough time period. There are several time periods where over 3 years, the stock market actually goes down. So you don't want to put in any money that you're going to need in those 3 years for big things like college expenses, buying a home, or maybe having a wedding. It's better to keep that money out of the stock market.
All right, Brian, so my high interest debt is gone. I have an emergency fund and I have a time horizon that's measured in years. What do I do next?
You got to find a broker. And if you don't know what a broker is, you go to a bank to store your money. You go to a broker so that you can invest that money.
Nowadays, there are dozens of wonderful brokers out there. If you want a curated list, go on to brianferoldi.com/broker, and there you'll find links to all of the major brokers out there, many of which offer zero fee commissions, which is fantastic for individual investors. In this video, we're going to do a step-by-step walkthrough with a relatively new broker that offers a lot of advantages that make investing very easy. That company is called M1 Finance. However, the steps we're going to go through apply to pretty much any broker that you choose.
Once you click on M1 Finance on Brian's webpage, it'll take you to a screen that looks just like this. What you need to do is find the box that says Get Started.
The next step from there is to go through the process and get yourself registered. You're going to have to put things like your email address, your password, and it's basically the same process that you go through when you open a bank account online.
After that, you're going to get a chance to learn a little bit more about what we think makes M1 Finance special, like the way that it automates investing and makes it simple for you to make your investments in the companies or the areas that matter the most to you. Click on that Continue button and they'll tell you how they go about doing this.
Now, once you're in there opening an account, you're going to be asked what type of account that you want to open, a tax-advantaged account or a non-taxable account. We're going to walk you through the 3 most popular types of accounts that you can open. The first type of account that you want to be aware of is called a Roth IRA. This is a tax-advantaged account that offers numerous advantages. Now, when you put money into a Roth IRA, there's no tax advantage at all. You're putting in after-tax dollars. But once the money is in a Roth IRA, it grows tax-free. And when you want to take money out later in life, there's no taxes to pay so long as you follow the rules. Now, in 2021, you could contribute up to $6,000 to a Roth IRA or $7,000 if you're over 50, assuming you qualify. Not everybody qualifies for a Roth IRA. There are income limitations. But if you do qualify to open a Roth IRA, it can be a fantastic place to put capital.
One of the cousins of a Roth IRA is a traditional IRA, and you'll be able to see how these two are very closely related. Unlike the Roth, in a traditional IRA, the money that you put in is not taxed. In other words, if you earn, say, $100,000 a year and you put $5,000 into your traditional IRA, when you have to pay taxes in 2021, you'll only pay on that $95,000 instead of the $100,000. It is untaxed money that you put in. Like the Roth, any growth that you experience when you buy or sell stocks, you'll be able to do that without paying taxes. When you do have to pay taxes is when you're in retirement and you're pulling that money out to support your living expenses. At that time, you'll be taxed at whatever tax rate you're in during those years. Now, Like the Roth IRA, there are limits for how much you can put into it, $6,000. And we'd like to mention that that $6,000 number is a combination. You could put $3,000 into one, three in another, zero into traditional, six in the Roth. But unlike a Roth IRA, there are no income limits to contributing to a traditional IRA.
The final type of account we want to make you aware of is just called a regular brokerage account. This is an account that allows you to invest, but there are absolutely no tax advantages at all. You put in after-tax dollars, and if you make money on any of your investments, you are going to pay taxes on them. A great thing about a regular brokerage account is there's absolutely no income limits or contribution limits at all.
After you choose what type of account you want to have, you're going to need to figure out how you're going to fund it. You can do that by connecting it to a bank account or setting up a recurring transfer. There will be lots of options that are very similar, again, to setting up your own initial bank account.
Great. So your account is open and you're ready to go. But what should you actually invest in? Before we get to that, we wanted to give a shout out to our channel sponsor, Quarter. With Quarter, you get frictionless access to conference calls, investor presentations, transcripts, and earnings reports from markets all around the world straight to your pocket for no cost. Quarter's mission is to change the way that people look at investor relations and to create a completely new bridge between companies and their stakeholders. The first step on this journey is to let you, the user, interact with the company's content while you're listening to it. To give Quarter a try for free, visit the App Store of your choice and try it out today by searching for Quarter. That's Quartr. Thanks, Quarter, for sponsoring the video.
So now that you've got all of this set, the question becomes, well, what can I actually invest in? The first thing we'll cover are mutual funds. That's where a professional money manager is taking your money and splitting it up between many different assets in an effort to accomplish whatever goal it is, usually to beat the market. Now, we're not huge fans of mutual funds, but sometimes they make sense for people. And it's worth noting that not every brokerage account allows you to invest in mutual funds. For instance, M1 Finance does not support an investment in mutual funds.
The second type of thing that you can invest in is what's known as an exchange traded fund or an ETF. An ETF is kind of like a hybrid between a mutual fund and a stock. It trades on a public stock exchange, such as the New York Stock Exchange or the NASDAQ. And there are thousands of exchange traded funds out there, and they can give you exposure to whatever asset you want. There are exchange traded funds that invest in cybersecurity stocks or agriculture stocks or growth stocks or value stocks, whatever flavor of investing that you want to come up with. Exchange traded funds are an easy, low-cost way to gain exposure to any asset class that you want.
Two types of exchange traded funds that we want to give a special call out to are very broad ones that are very popular. The first are index funds, and that's where you're investing money in an index. In this case, we give the example of the S&P 500 index. By buying the ticker symbol SPY, you're investing in an ETF that invests in the 500 largest publicly traded companies in the United States. The second one we want to call out are target date retirement funds that have a year associated with when you will actually be retiring. The idea is that your risk profile will change from riskier stocks when you're younger to more conservative allocation as you get closer to retirement to make sure that you have everything you need when you hit that retirement age.
One reason why we wanted to call out M1 Finance is they have this thing called M1 Pies, which make it extremely easy for new investors to invest their capital exactly the way they want to. So you can use these pies to choose what percentage of your portfolio you want in any asset class that you can think of. They have more than 6,000 stocks and funds that you can build a custom pie. And it doesn't matter how much capital you put in. If you put in $50, but you want 10% in healthcare stocks, 10% in technology stocks, and 10% in real estate, M1's pies will allow you to do that. And if you don't want to be responsible for picking those investments yourself, M1 also has more than 80 curated pies that are picked by experts that allows you to invest according to your specific risk profile.
Finally, you have the opportunity to invest in individual stocks. And if you're watching this channel, we're guessing that that's probably something that is interesting to you.
Now, as for how do you find stocks to invest in and how do you screen them? Well, we have a lot of videos exactly on that topic. Click the link you see on your screen to watch a video where we show you the places that we find individual stock investments. We hope this video was helpful and we wish you good luck with your investing. Brian's out.